Thanks for joining us. I'm Marlin Bohling with you as we dive a little deeper into our first trading day of the week. And we are joined in studio by Chris Swift of Swift Trading Incorporated in Nashville. How are you?
Doing great, Marlin. How are you this morning?
Happy Monday.
Thanks, sir. Same to you.
So, okay, we had a negative pall, kind of a pall cast over the grain market last
Slightly,
week.
yes.
Not necessarily getting off to much of a better start here today. I don't know if this is just follow-through selling, if things have changed in fundamentals. Let's go ahead and take a look at our prices, and then I can't wait to hear your comments when we come back here in just a minute. Okay, let's go to the board. On the corn, here we go. July down 5 3/4 at 355.5. And we have December new crop down 6 at 376 3/4 per bushel. That is just one tick from our low of the morning so far. We had a high overnight that was about 7 cents higher than that. Now, if we take a look at our soybean trade so far today, we have July down 2.5 at 903. This thing is really weird here, Chris. It's been flipping around and going higher overnight and then lower than higher, and now we're back to lower again. We have November down 4 1/4 at 926 1/4. That is now 13 cents basically off of our overnight high. Very weird trade in the soybeans today. On the wheat market in Chicago, we have July currently down 9 1/4. A lot of pressure here at 490 1/4 per bushel. We're 9 cents off of its overnight high. In Kansas City wheat, we have July now trading 12 1/4 lower at 507 1/2. Only one tick from its low of the day off of its overnight high by 11 cents. Meanwhile, looking at the Minneapolis wheat trade, July is down 3 at 567 3/4 per bushel. Cotton, it seems like the selling is relentless. We have July down another 217 points at 88.55 cents per pound. December down 234. Put some silver lining on this.
Well, I wish I could, but I think the majority of it all hinges on the tariffs and the retaliatory actions by China and some of our other trading partners last week of our threats of putting $50 billion worth of tariffs on other countries' goods coming into the U.S. So it has, unfortunately, instead of negotiations, it's turned into, kind of a war, I guess.
But I have had some traders say that to some commodities here, that's kind of becoming old news already.
Well,
they're more worried about weather.
And the weather is good. There's no doubt. I think the crop progress report this afternoon will reflect a really good term there. And what I continue to look at is we don't reduce our demand any whatsoever. The tariffs do not make for one less animal on feed, for any kind of consumer consumption decline. It is just a battle amongst the wholesalers and trying to get product moved in and out of the country.
How oversold are the grains?
I think they're very oversold. A lot of them are back below prices they were before any tariff issues ever began whatsoever. And although the bean market does still look good, there's still some issues out there with the bean crop. I don't think it is near perfect, in other words, to get us through the rest of this year, nor is the corn crop. So, and of course, wheat, the most puzzling one, how you can lose 50% of anything and the price just still careen lower. I have no idea.
You bring up a very intriguing point that we're lower than before the tariff talk started. I like that point. We'll have to examine that and keep an eye on that. All right, we'll come back in just a moment and we'll take a look at our livestock trade on the other side of these messages. And we're back with you to take a look at our livestock trade today on a Monday. I'm Marlin Bohling with you, your tour guide to your ag commodities. And with me, I have Chris Swift of Swift Trading Incorporated here in Nashville. All right, let's go ahead and take a look at the livestock trade and see which direction they want to go today. It was a real kind of a Las Vegas type thing last week. Let's take a look here at cattle. Okay, for the time being, Chris, and I will underline, for the time being, we have June live cattle down 43. We have the August down 30 cents now at 104.48. And now we're about $1, almost $1 off of our earlier high of the day. We have the October down 17 at 106.85. And if you look at the highs, we were, of course, higher earlier today. So once again, it's up to its old tricks again. Now looking at the feeder cattle market, we have the nearby August contract 32 lower at 147.65. However, you look at the high this morning, it was 148.90. So that means we've come off of that by $1.25. So at one point, we were almost $1 higher this morning, and that didn't last very long. September down 43 at 147.85 right now. The deferreds seem to have a little more weakness than the nearbys do, Chris. Why would that be?
I'm not real sure right at this time why the deferreds are a little bit lower, but clearly after last week when the U.S. did not see beef as part of the retaliatory commodities on China's list, they gave them a little bit of spurt. But the demand is phenomenal still for beef, and we are seeing good clearance out of the grocery stores, but we have tremendous amounts of inventory to meet that. And I don't think they sold last week's show list, and they did get a little better money. They got 113 for some cash cattle, but I don't think they showed that sold the whole show list last week.
You keep your ear pretty close to the ground on the cash cattle market. Mm-hmm. What are the rumblings out there about this week? What kind of trend do you see?
Well, I'm not real sure, but we have June. This will kind of be the last week for June, because when June expires next week at noon on Friday, I would imagine the bases will already have been swapped to the August contract. So August still carrying quite a bit of a discount to the cash market, but the cash market is still holding up very well. Boxes prices are holding up very well. We watch midday movement still elevated, and I think it's being pushed through the supermarket. There's no doubt about that, but still a lot more to come.
Let's take a look at lean hogs here, if you don't mind.
Sure.
And we'll see what the prices are doing right now. Currently, we have the lean hogs on July now 80 higher at 82.52. We have the August unchanged at 78.25 per hundredweight. And October now 2 cents higher. We're at 64.30 per hundred. December up 22. So I guess you can call it steady to a little bit firmer on the lean hog trade. Now, we were looking earlier at a lean hog chart here, Chris. Mm-hmm. What does that tell you here? Because it looks like they're kind of seeking out some overhead resistance.
Yeah, they are. And if you can look at the back end of the hog market, you can see we're already in a $20 discounts as we move to the fourth quarter of this year. So I think hog production, we'll get a hogs and pigs report this month. It's supposed to be elevated again. So pork production is anticipated to continue to rise for at least several more quarters out there. And I think that's what we're seeing right now. We've got good front end demand. It's grilling season, and everybody likes a little bacon on that cheeseburger, but it's probably going to come to a pretty abrupt end in another month.
So I had been hearing there was some concern about the heat impacting hog weights.
Right, that's true. They're a little bit lower. They're a couple pounds lower, but not anything dramatic considering the amount of production that we're going through.
All right. Well, Chris, thanks for coming in
Absolutely.
on a Monday. As always, look forward to it.
It's a pleasure, Marlin.
All right. Chris Swift of Swift Trading Incorporated in Nashville.